Good afternoon. Happy Sunday, everybody. I hope you've had a good weekend. Welcome back to Eating the Elephant, where we talk about Hurricane Michael insurance information and some recovery tips, and we try to break down the recovery that is this giant elephant into bite-sized pieces for you. As we discussed on Wednesday, today we're going to talk a little bit about looking under the hood of your insurance policy. When you go shopping for a vehicle, you kick the tires, you look under the hood, you flick open the ashtrays and things such as that, and you take a pretty good look at what's going on. And I think most of the time when we buy insurance, we look at the price, and that's about it. I think some folks manage to do a little bit better than that, but I think the majority of folks that are out there shopping just look at price and price only. I think some people don't realize how different insurance policies can be and how differently different insurance companies can behave after a storm. I think we've all learned that lesson this time. And hopefully everybody can make a little more informed decision next time you go shopping. The other thing is, I think people are very intimidated. An insurance policy is a very thick, ugly insurance contract written by a bunch of lawyers, and frankly, it can be very intimidating language. It's like trying to read the terms of service for your Apple iPhone or something like that. And I think what we all do is the same thing. When you're updating your iOS. You click, yes, I have read the terms of service and I understand them. And you do the same thing, I think, a lot of you, when you shop for insurance. Hey, what's the price? Okay, who do I make the check out to? Where do I sign? And on the way. I think it's important, and I think we all now better understand why it's important to look under the hood. So I want to talk about a few specific policy provisions. But before I do that, I want to talk about sort of the mechanism by which you go. If you were out to shop for a car, the first thing you would do is probably think of a couple of models of vehicle that you might like, but then you would probably consider the dealer. And I think that the very first thing that you should look at is the point of purchase. Obviously, as an insurance agent, I'm biased in this case, but I think you ought to use very, very good care in selecting your agent. And the person with the biggest ad, the person with even the biggest presence on Facebook or the most billboards, that's not where you need to go. Just because someone's a good salesperson doesn't make them a good insurance agent. What you need to do is go on reputation. If at all possible, you need to go local, because I think we've all seen after a storm the ability to go sit down across the desk from someone and metaphorically get them by the throat if you need to is a very important aspect of insurance recovery. So go local if at all possible. Go with someone you know. Go with someone who has a good reputation, and ask around. I would ask people you trust. Ask your accountant, your attorney, your friends, people you see at a Chamber of Commerce meeting or a Rotary Club meeting, something like that. When you're dropping your kids off at school and you talk to other parents, find out who has had an actual good, positive, professional experience with an insurance agent and go there. And you let them probably do the shopping for your insurance company, but that doesn't mean that you're off the hook as a client. I think what you need to do is ask a lot of questions about the insurance company that's recommended to you. You need to know a lot of things. The two things that I think are the very most important are, what do their finances look like? And your agent needs to be able to answer that question very, very well for you and in an informed way, or that's probably not your best selection. That's something that insurance companies and insurance agents need to be concerned with. There's an awful lot of insurance companies out there that are undercapitalized. I don't say that to scare anybody, because there aren't going to be any that go down after this storm. I see only one out of probably 60 that's even in any trouble. But you do need to use some care and ask about the finances and do a little research, maybe online, about their finances as well. I will caution you about over-researching. I call it WebMDing the problem, because if you go on a forum somewhere and you just ask about an insurance company, the very first part you're going to get is the complaints. And I think you might be a little intimidated by that. There's not going to be an awful lot of balance, because how many people have a really good insurance experience and go on and post that on Google or Yelp? It's a little bit like going to your dentist. Nobody tells you what a great experience you have at the dentist. But if you have a poor experience, you're certainly more likely to talk about it. So do some research, but do some research and be very critical of what you find on the web. Beyond the finances, the other question you need to ask, and you need to ask both the agent and other people around you, is ask about their experience and how they performed after the hurricane. I don't think there's any clearer way that you can differentiate insurance companies, good and bad, than how they performed after the storm. If you look at companies, and these are some of the ones with the shakiest finances too, you can look at People's Trust, at Edison, you can look at FedNat, Florida Peninsula, Anchor to some degree. They grossly underperformed in this storm. And I don't think they should be rewarded for that. I think what needs to happen is they need to straighten out their ship. They need to get things together a little bit better, improve it, and then I think they could come back and solicit some business from folks like us. But they did not perform well. You look at the other end of the spectrum and you look at the Tower Hills of the world, the USAAs, I think they performed extraordinarily well. And those are companies that you should give a second thought to, and you should seek out by name. USAA is for military families only, so that you're going to be limited in your ability to go there. But you need to focus on the companies that performed the best after the hurricane, because that's what you want them here for. And when they can perform well in a really, really bad situation, I think that shows that they can perform very well probably when the situation is not as dire. Say if you have just an accident, a house fire, say in your kitchen, that does not reach the level of destruction that Michael did, you should have a much better experience. But some of these insurance companies that underperformed, I don't see any reason to believe that they would perform any better in a less stressful, less traumatic situation. So give that some thought too. Let's talk a little bit about coverages going under the hood. Coverage A is the most obvious number on your insurance policy. It's, well, other than the premium probably, but it's the amount of insurance that your house is covered for, your structure is covered for. I don't have any of my clients right now coming into my office and complaining that they were overinsured, they had too much insurance. And I think we've all seen that the value of your home on the market and the value that it takes to rebuild that home or to recover can be vastly, vastly different. If you look at just the mitigation costs in some cases, $70, $80, $90, $100,000 just to get things dried out and torn out, and that's before you bang the first nail, replace the first shingle. So rather than skimping by 10 or 20 or even $50,000 on the top to save a little money, go ahead, make sure you add that to there. You can always save it on the other end. If you're going to increase your insurance, say $50,000 on your structure, you can always increase your deductible or make some other choices that can moderate that cost increase. But why leave yourself $50,000 or $100,000 short just to save a little money on the premium on the front end? It doesn't make sense. The second thing I think a lot of folks have learned the hard way is your other structures coverage. Fences have been excluded under some policies due to hurricane. You need to look at that. You need to see if there's an exclusion for fences if you have a lot of fence work. You need to see what the limit is for other structures as well. You need to find out if your pool cage is going to be covered. It's going to be a little bit difficult to get your pool cage covered in most cases beyond say $10,000 or $20,000. There are insurance companies that will simply include it as a matter of course. There are some that you will see it excluded from, but you can add it back for an additional charge. But those are the kind of questions you need to ask your agent, and you need to look at your policy and make sure that's done properly. We've had some people have some very unpleasant surprises after the storm. With regard to contents, I haven't seen a lot of difficulty there, but the one thing you need to really watch for is replacement cost coverage on your contents. Contents coverage can be done either replacement cost or actual cash value, in other words, the depreciated cost of something. And if you have a couch that's going to cost $800 to replace, you don't want someone paying you a garage sale price of a couple $100 for that couch, and then you're faced with making up that difference. It's just not worth the modest savings that you would get. That's not a place to go. You need to look at water and mold limits. There are an awful lot of insurance companies now. It's most common now to find a $10,000 what they call mold sublimit, meaning that within your policy, no matter how much coverage you have, they will only pay up to $10,000 to mitigate mold. So that's going to be an issue for you. But the other one that is really becoming a problem is water sublimits. And when I talk about water damage, I'm not talking about flooding water comes from two sources, from God and from man. And if it's coming from God, if it's coming across the street at you, that's not what I'm talking about. That's flood insurance. If you unzip a pipe, if a hose cuts loose behind your washing machine, something like that, that's water damage. And it doesn't sound like a big deal, but it seems like in our office we only have water leaks on the second floor, and they only happen, I think, when people have hardwood floors. It's amazing. But you can destroy hardwood floors, carpet, cabinets. You can have to tear out walls, baseboards. Water can be a real problem. And a lot of insurance companies are either eliminating water damage coverage, say at 25 years of age. When your house is 25 years old, they will automatically drop that coverage off. And some insurance companies will simply limit you to $10,000. what you need to do is you need to find an insurance company that will write you a full limits on water. In other words, they don't have a separate limit for water damage. It's just covered like any other claim. Now, you may be looking at having to replace some hoses on your washing machine, have an inspection, have a plumber out. There might be some things that you need to do in order to prove both to yourself and to your insurance company that you're not looking at an imminent water leak. I think it's very important that you take an active role in this process too, and the best situation for you is to not have a loss at all. So why would you not want to look at things like your water heater and your very important high pressure plumbing fixtures, things like that. So keep in mind that that's something that can be buried in the language in the back, and you don't want to see that. I mentioned fences and pool cages. I want to go back to pool cages just for a second. They generally are attached to the home, so they're going to be part of your coverage A. It's pretty rare to see one that's completely detached from the house. So it's usually going to fall under your coverage A limit, so make sure you have an adequate coverage A limit to cover that, and ask your agent, because there are some insurance companies that are paying for losses to pools, particularly that are not what I call caged. If they're open, they're paying those as coverage B, other structures. And we all know that number is relatively low, certainly relative to the coverage A amount. So you want to make sure that you buy extra coverage there. If you have a pool, if you have some expensive outdoor sheds, maybe a detached garage, or if you have an awful lot of very expensive fencing, things like that you need to certainly watch for. And so don't just kind of skip by all those numbers and just look at the top number and say, oh, that's about right for my house, I think we're okay. You have to look at all the numbers underneath. Again, you have to look under the hood. I would say finally, I know that not a single one of you is probably going to take this advice, but I have to give it anyway. Take a look at your policy. No one's going to read their policy, I realize that. Everybody reads their policy after the hurricane, not before. But I would say if you're willing to take a little bit of time with your policy, you don't have to read the whole thing top to bottom, front to back. What I would suggest you could do is flip to the exclusions. If you will read through the exclusions, that is the most important part. That tells you where your coverage is and is not. Reading what is covered isn't as important as reading what is not covered. Most of you will be on what's known as an HO3 policy or a DP3 policy if it's a rental. And those policies are designed to cover everything unless it's excluded. So unless there's something pointing to an exclusion, it's covered. Some people call it, well, we're not going to use some of the terms that we use in my industry because they can be misleading to people that don't live in my world. But you can look at other types of policies that you are only covered for specific items. So unless it is specifically listed, you don't have coverage for that. Most people don't have that kind of policy. You have what would be called an all perils policy, or something that everything is covered until it's excluded. Therefore, the reading you need to do is in the exclusions. And not just the first set of exclusions, you need to flip to the very back of the policy to the endorsements, because there will be several things back there. There will be probably a lead exclusion. A lot of them still have a Y2K exclusion, as crazy as that sounds. They will have limits for mold. That's where you'll find those, or for water maybe. You may have a sump pump and sewer backup exclusion or limitation. But flip back to the back and read the titles of all those endorsements, and you'll see another one called Florida Changes. And that usually, most of that endorsement deals with time limits and notifications and things such as that. But every once in a while they'll sneak in some language there too that's unique to Florida policies, and you need to be aware of that. I think that's where we're going to leave it for today. I would encourage you, I hope you'll all go out and have a great week. It's really nice to see things beginning to green up a little bit, and we're seeing the trees, my wife calls it poofing, because you're seeing little bursts of leaves everywhere, and it's beginning to make things look much, much better. So I hope you'll enjoy that, and we'll see you on Wednesday.